Good morning students. We are on the topic reconstruction of partnership. In previous lecture we have seen the meaning of revaluation of assets and liability and something we have discussed about the reconstruction of that. We have also discussed that we open a special account which is called revaluation account. Now let us see how journal entries are given for the changes in the value of assets and liability at the time of reconstruction of partnership. So these are the different possible situations we have already discussed about. Once again we will talk about them. Because of revaluation of assets and liability, if there is increase in the value of asset, so we know increase in the value of asset, it is known as profit, and we have also discussed if it is a profit it will be credited to revaluation account. So the journal entry will be for that respective asset account debit to revaluation account. This is entry for increase in the value of asset. Now if there is a decrease in the value of asset, that is termed as loss. So in case of loss we have to debit the revaluation account. So to respective asset account, our entry will be, journal entry will be revaluation account debit to respective asset account. Right? Third condition, if the value of liability increases, so again this is a loss, and if there is a loss, revaluation account has to be debited. So revaluation account debit to respective liability account. Next condition, if the value of liability decreases, liability's value decreasing, there is a profit to revaluation account, that is credited to revaluation account. What to debit? Then respective liability. Say for example, creditors are reduced by 5,000, so creditors account debit to revaluation account. Next is for unrecorded assets, accrued income or prepaid expenses. If we find any unrecorded asset or accrued income or prepaid expenses, all such things are profit. So it will be credited to revaluation account. And what to debit? So that particular asset or accrued income or prepaid expense. So unrecorded asset, accrued income or prepaid expense account debit to revaluation account. What else? For unrecorded liability, if you find any unrecorded liability and you want to bring that to your books of account, so it's a loss, revaluation account debit to unrecorded outstanding liability account. Finally, let us talk about provision. There may be increase in the value of provision or decrease. If there is an increase in the value of provision, so revaluation account debit, because it is a loss, revaluation account debit to that provision. What could be that provision? To bad debts reserve account, or else discount reserve on debtors account. What else? If there is a decrease in the value of provision, it's a profit, will be credited to revaluation account and will be debited to respective provision. What could be the provision? Bad debts reserve account debit or discount reserve on debtors account debit. So these are the different journal entries we have to pass. After giving journal entry for all such transactions which are increasing or decreasing asset or provision or liability, we have to close the account. Now we will talk about how to close the revaluation account. We very well know each account is having two sides, and when we close it, we find three conditions. One condition, both the sides are similar, that the total of both the sides are equal. If total is of both the sides is equal in a revaluation account, that means no profit, no loss on revaluation. I repeat, if the total of debit and credit side of revaluation account is same, that means there is no profit or loss on revaluation overall, right? But another may be the condition when there is a credit total of revaluation is more than the debit total. It is called overall profit on revaluation. When credit total of revaluation account is more than debit total, it is known as profit on revaluation as a whole. Now we very well know profit belongs to whom? Owners. Owners are partners. So this profit is transferred to partners' capital or current account. So entry we pass here, revaluation account debit to partners capital oblique current account. We know very well when to use capital and when to use current account. We have already studied partnership final account, introduction of partnership accounts also. When there is a fluctuating capital method, partners capital account we write. When there is a fixed capital method, current account we will transfer the profit. What could be the other condition in this regard? That debit total is more than credit total. If debit total of revaluation is more than its credit total, it is overall loss on revaluation. So whether it is profit or loss, it belongs to owner. It is also transferred to partners capital or current account. So here the entry will be partners capital oblique current account debit to revaluation account. So this is how journal entries are given for different transaction of changes in the value of assets and liability. In the next video we will try to learn these things from one illustration example. Okay, thank you.